For Tax Tip Tuesday, we are joined by Chris Porter with PorterKinney this morning. Good morning, how are you?
Doing well, thank you.
Good, so we're talking about investments today. So let's start with the basics. Someone who is buying and selling stocks, what should they know?
Well, thank you. I think most people know that if you buy a stock for $100 and later sell it for $200, you're going to pay taxes on the $100 gain.
Right.
But what a lot of people don't realize is there are ways to minimize the tax on that.
Okay.
And one of those is be sure you hold on to the stock for longer than a year.
Oh, good to know.
If you hold on to the stock for longer than a year before you sell it, you pay actually a lower tax rate. It's called a capital gains tax rate. So a lot of people will make the mistake of having a stock for, say, 360 days or 355 days and selling it just short of that year mark, and they'll pay higher taxes.
And then they're wondering, what the heck?
Exactly.
How did this happen?
That's right. So second strategy you could use is you could actually, if you have a significant gain on stock, like let's say many years ago you bought some Amazon stock for $100,000 and now it's worth $200,000. Instead of selling it all in 1 year and dumping that entire $100,000 gain on your tax return, you could actually spread it out over 2 tax years.
Okay.
Sell half of it this year and wait till January to sell the other half.
Interesting.
So that's another strategy people can use.
Right.
And finally, if you do have a large gain in your portfolio, you could look among your portfolio for stocks that have lost value. I don't know if you've heard the stock market sometimes goes down in value. And you could sell those loser stocks to offset the winning stocks. And if you do that in the same year, the gains and the losses could cancel each other out.
Interesting. Okay, so what about this really quickly? How's Bitcoin changed things for you guys?
I don't think I want to go on live television commenting on Bitcoin.
Oh, okay. Well, you know, it will be unfolding as years go on, right? Because, I mean, people are talking about it. So.
Absolutely. And the IRS is becoming more aggressive because, as you know, a lot of the Bitcoin transactions are under the table right now.
Right, exactly. So we'll see. To be continued is what we'll put it at. Thank you,
right.
Chris. I appreciate it.